In the summer of 1815, as Europe braced for the outcome of Waterloo, a quiet drama unfolded on the streets of London. A short, reserved banker named Nathan Rothschild stood at the center of a network so efficient that his couriers reached the city before the British government's own messengers. What he did next became one of the most misunderstood moments in financial history. Yet behind the myths lies a simpler, more revealing truth. The Rothschilds weren't magicians. They were masters of information, trust, and credit, forces far more powerful than armies. To understand how a family of modest cloth merchants became kingmakers, we must return to a cramped ghetto in Frankfurt, where the story truly begins. Mayer Amschel Rothschild was born in 1744 in Frankfurt's Judengasse, a narrow, crowded lane where Jewish families lived under strict regulation. These limits, while oppressive, created an environment where economic specialization and tight-knit community networks flourished. Mayer's father, Amschel Moses, traded cloth and coins, small businesses but rich in practical financial knowledge. Coins, in particular, exposed young Mayer to Europe's fractured monetary landscape, where principalities issued their own currencies and trade required constant negotiation. By the time he was a teenager, he understood something many nobles didn't. Value was rarely in the metal itself, but in the trust behind it. After his parents died, Mayer was sent to Hanover to apprentice with the Oppenheim banking firm. There, he encountered a world larger and more organized than anything in Frankfurt. He learned bookkeeping, correspondence, and, most importantly, the disciplined, almost ritualistic etiquette of finance. Letters had to be precise, respectful, and timed with military exactness. Errors were costly. Trust was currency. Mayer absorbed all of it. When he eventually returned to Frankfurt, he wasn't merely a merchant. He was fluent in the emerging international language of credit, where promises, not coins, moved commerce. Inside the Frankfurt ghetto, family businesses often displayed symbols instead of numbers. The Rothschild home bore a simple red shield, zum roten Schild. It was an unremarkable decoration, yet it would become one of the most recognizable financial signatures in the world. Mayer opened a small coin shop beneath it, selling rare metals to traveling collectors. One day, a young noble from the House of Hesse noticed his expertise and purchased several pieces. This seemingly minor interaction revealed a structural truth of early modern Europe. Nobles needed liquidity, and merchants could provide it. A door in the ghetto had just opened to a princely court. The landgraves of Hesse were among Europe's wealthiest rulers, not because of territorial size, but because they leased soldiers to foreign powers. This produced large surpluses that required careful management. Mayer, with his knowledge of coins and currencies, became a trusted supplier and later a small-scale financial agent. He kept meticulous records, handled payments, and sourced rare items the court desired. These tasks might seem mundane, but they built a foundation of reliability. In a world before balance sheets and surveillance, a ruler needed someone whose word could travel faster than his armies. Mayer became that person. Mayer's business expanded steadily because he understood incentives. Nobles valued discretion. Merchants valued access. Mayer fused both. His letters were legible, cautious, and never overstated. His transactions were conservative, avoiding speculative risks. And in an era when anti-Jewish restrictions limited banking roles, he built trust the only way he could, through flawless execution. By the late 1770s, he was no longer merely a coin dealer. He was a facilitator, connecting capital with need. Reputation, he learned, compounds like interest. The more precise he became, the more the world opened to him. By the 1880s, something fundamental shifted. Mayer realized that handling coins was profitable, but extending credit was transformative. Gold sat idle. Credit created movement. This insight aligned perfectly with Europe's geopolitical tensions. Wars were expensive, governments were often illiquid, and traditional lenders lacked speed. Mayer began arranging loans for higher nobles, structuring agreements that relied on trust rather than physical transfer of metal. In doing so, he tapped into a financial truth that underpins modern banking. Whoever can move money faster, through promises, not coins, shapes the decisions of those who command armies. Mayer and his wife Gutel raised 10 children, but the 5 sons, Amschel, Salomon, Nathan, Karl, and James, became the pillars of a continental strategy. Mayer understood that information was the edge. Nations rose and fell on timely knowledge of markets, wars, and political shifts. So he deployed each son to a major financial hub: Frankfurt, Vienna, London, Naples, and Paris. What emerged was the first modern multinational financial network, bound not by contracts, but by family loyalty. Letters coded in subtle phrases moved daily, creating a private information system faster than most governments possessed. Among the brothers, Nathan proved uniquely suited for Britain's commercial culture. Assertive, analytical, and resilient, he arrived in London in 1798 with modest capital and enormous ambition. Britain, already a global trading empire, needed constant financing for its wars with France. Nathan built relationships with textile importers, commodity traders, and bullion dealers. His approach blended caution with bold execution, small risks to establish trust, larger moves once he understood the system. London rewarded those who could navigate its complexity, and Nathan became one of the few foreigners to master it quickly. The Napoleonic Wars created pressures no ordinary banker could handle. Britain needed to fund armies across Europe, pay allies, and move bullion through hostile territories. Traditional methods were too slow. Governments needed speed and secrecy. This was the Rothschild moment. Using couriers, coded letters, and family coordination, Nathan and his brothers engineered a logistics finance hybrid. They moved money through bills of exchange, transferred gold with military convoys, and arbitraged currency across borders. In wartime chaos, system advantage becomes decisive. The Rothschilds had built the system, and Europe relied on it. As the wars intensified, the British government faced staggering costs. Nathan stepped in, arranging large-scale loans and ensuring payments reached troops on the continent. His brothers in Frankfurt and Paris helped route funds through neutral territories. This wasn't charity, it was disciplined, contract-driven finance, where risk was calculated and returns were proportional to complexity. But it also revealed a broader pattern. States with efficient access to credit outlast those without it. The Rothschilds demonstrated that modern warfare depended less on battlefield heroics and more on stable, rapidly deployable capital. The Rothschild couriers traveled with remarkable efficiency: horse relays, coded packets, and designated safe houses. This allowed the family to arbitrage information. When exchange rates fluctuated or political news broke, they could act before markets fully digested the implications. This was not manipulation. It was the disciplined use of superior logistics. In a pre-telegraph world, faster information essentially was a form of liquidity. Nathan's ability to gather, interpret, and act on such data made him indispensable to the British treasury and respected, sometimes feared, by competitors. Much later, a legend emerged claiming Nathan manipulated the London bond market after learning of Napoleon's defeat early. The truth is less dramatic, but more instructive. Nathan did receive news before the government, but his actions were cautious, not spectacular. Markets were volatile, communication was uncertain, and the risks of overplaying information were high. What matters isn't the myth, but the mechanism. The Rothschilds succeeded because they built faster, more reliable information channels, not because they controlled outcomes. Their advantage came from structure, not spectacle. After the war, Europe entered a rebuilding phase. Governments needed long-term financing, and the Rothschilds were uniquely positioned to provide it. Nathan's London operation issued massive government loans, not only to Britain, but to Prussia, Austria, and eventually France. Bonds became the arteries of modern states, and the Rothschild network acted as a circulatory system, ensuring capital reached where it was needed. The power didn't come from dictating policy, but from enabling stability. In the 19th century, reliable financiers were as critical as reliable generals. James, the youngest brother, established the Paris branch in the 1820s. France, still recovering from the Revolution and Napoleonic defeat, needed capital for infrastructure and industrialization. James excelled at relationship building, securing concessions for railways, mines, and utilities. His style balanced charm with discipline, making the Rothschild name respected even in a country where Jewish participation in high finance was controversial. The Paris branch soon rivaled London in influence, demonstrating the strength of Mayer's original vision: decentralized presence, coordinated strategy. The 5 branches operated autonomously, but shared information constantly. Exchange rate data, political rumors, grain prices, and shipping delays flowed through letters that read like early financial terminals. When one branch extended a major loan, others helped distribute the bonds across their markets. This created resilience. If France faced instability, London supplied liquidity. If Austria struggled, Frankfurt provided assurance. The family effectively built a private proto-central bank system across Europe, guided not by ideology, but by prudence and interdependence. As industrialization accelerated, the Rothschilds shifted from wartime finance to infrastructure development. They funded railways connecting Vienna to Galicia, Paris to Lyon, Naples to northern Italy. Railroads, like credit, compress distance. They reduce friction, increase information flow, and integrate markets. By backing them, the Rothschilds strengthened Europe's economic foundation. Their investments weren't flawless, but they aligned with long-term structural trends: urbanization, trade expansion, and the rise of national economies. They weren't shaping the world through conspiracy. They were responding to incentives and building systems others relied on. With visibility came suspicion. In politically volatile Europe, a wealthy Jewish banking family became an easy target for conspiracy theories. But historically, their influence derived from reliability, not manipulation. They lent to governments because governments needed lenders. They gained access because they delivered results. Their networks were strong because trust, earned over decades, held them together. The misunderstanding reveals a recurring pattern. When systems become complex, people search for simple explanations. The Rothschilds were powerful, but their power came from competence within the system, not control above it. By the late 19th century, the family's dominance faded
As new institutions emerged, central banks, national treasuries, joint stock banks, and eventually global capital markets. But the blueprint remained. International finance, built on credit, distributed information networks, bond markets, and cross-border cooperation was, in many ways, the Rothschild model scaled beyond any single family. Their story illustrates how durable systems arise, not through dramatic moments, but through incremental improvements in trust, communication, and the movement of capital. Mayer Amschel Rothschild never wore a crown, commanded an army, or governed a state, yet the systems he built enabled kings and governments to act. That's where the kingmaker title truly belongs, not in dominance over rulers, but in the infrastructure that allowed rulers to function. From a cramped ghetto in Frankfurt, he created a framework of trust and credit that outlasted empires. Modern finance, bond markets, distributed banking networks, information-driven capital flows still reflects his principles. His legacy is not a dynasty of power, but a demonstration of how systems quietly shape the world.